Welcome back to the stock portfolio updates. Today alone, my portfolio is down nearly $4,000. That's made up of the 2,888 USD, or 5% my portfolio is down in my US portfolio. And then my Vanguard portfolio is also down. Overall, it's not been a very good time recently for investors, and many have probably been hearing about the tariff news coming out of America with their president. Overall, I'm a long-term investor, and my portfolio value has really taken a hit, but I've been investing a lot of money in recently. And having a quick look at my portfolios, you can see my US portfolio is currently at around $54,000, and that's made up with the major players such as Apple, Amazon, Costco, Alphabet, Microsoft, and VOO. VOO just tracks the S&P 500. In my Vanguard portfolio, my major holding is VGS, which tracks the International Shares ETF. So this has a real broad diversification. And then my smaller holding is VLC. So between the two of them, I'm getting closer and closer to hitting the $50,000 mark, which is a goal of mine. And I am also just receiving a massive dividend for my levels of around $500, which is the biggest dividend I've ever got. Today I'm going to be going through my portfolio and how I'm kind of looking at this market downturn. One of the biggest hit has been Apple, my portfolio wise. If we have a look at just the last day alone, the stock is down 9.25%. This is a stock that I've been selling out of recently, so I did take a bit of gains off the table, which was nice, but the stock did get hit heavy today. So Apple is a very quality company. I think long term, I still think it's going to be completely fine. But when you have a look at this trade, if it had falling all the way from around $224 to $203 a share. So it's been a very rough month as well, down 14%. And even in the last 6 months, down 10%. So Apple's one of the ones that's got hit the heaviest today. Next is Amazon. Amazon is one that really hurt, as it's a position that I've been growing and growing, and the stock just continues to keep falling. This hasn't changed my sentiment on Amazon, but obviously there has been a lot of news coming out with the tariffs. That's one of the reasons Amazon and Apple both got hit, due to their exposure in places like China. And Amazon, as an example, is a global seller, so they provide services everywhere across the world you could think of. They probably provide services there. And then companies like Apple with their manufacturing overseas. So these are the reason these companies have been hit so hard. Who knows if these tariffs will stay, whether it will just be a long-term issue or it will be a short-term issue. My goal is just to buy in quality companies when they're discounted now. And I think, again, I'm a long-term investor. I'm still quite young. I still have, like you would say, a 20, 30, 40, 50-year investment horizon ahead of me. And I think I can hopefully use this time to purchase into stocks. I have been putting a lot of money in, so I don't have as much money sitting on the sidelines now. That things have really dropped, which is quite sad. But that's just the name of the game. I can't time the market. My goal is to just dollar cost average into companies I believe in. So having a look through the rest of the holdings, Costco is actually up, surprisingly. So whilst many stocks have been hammered, Costco has actually done quite well. You can see it's up 3.64% in the last week. So whilst this is a small portfolio position, it's nice to see one of these companies that are actually in the green. So people might ask, why is Costco in the green? Costco is one of those companies where people believe it's going to be fine, kind of no matter what in any circumstance. They might even gain market share. As many other of their competitors die out, Costco will just continue to be strong. It's also kind of like a flock to quality. People move to the companies they really believe in long term, and Costco has always traded at quite an expensive PE ratio, as you can see, 56. And my average share price is all the way down at 525. So my average share price is a lot cheaper, and I'm up around 68% in Costco, but I haven't sold it completely. I used to own a bit more, but I did sell part of my position. But I still hold some of my Costco position, and it's done quite well for me. So this is one of the companies I believe in long term, and it's actually one of the positions that are actually up in the last week. So next we can have a look through at Google. Google's a company that I've been investing more and more in, and the stock is down a lot in the last week, down 6.6, but in the last day it's only down 4% when other companies like Apple are down 9. That's because, in my opinion, it's really hit. It's almost, you can only discount a stock so far. It's now trading at basically an 18 PE ratio, 17. $150 a share is crazy. So if we have a look at just the last year alone, the stock's pretty much flat. So there was a time, even back here, there was time September when it was trading as flat before it had this big run up. And overall, I'm down now around 8% on Google shares, and I have an average share price of around 164. But I still believe long term Google will be strong. I think there's a lot of worries about the LLMs and affecting Google's business model, but I think long term Google will be fine. I think it can come out the other side. It's printing cash. Same with Amazon, and that's one of the reasons those are the two individual holdings that have really been growing. Microsoft is next. Same thing. I think Microsoft will be fine in the long term. It's down 10% in the last year, so it's not been a very good time for Microsoft investors. Even 2024 wasn't a very good time for Microsoft investors. I hold around 5,000, so it's quite a bigger position for me. And I'm still up 18%, but yeah, not the best returns overall. And then I did just invest another $1,000 into my stake portfolio. As you can see, there's an active order here. And that is because I am looking to invest some money into the S&P 500 whilst it's dipped now. I try to keep around 50% of my stake portfolio in the S&P 500, which I'll show you guys a little bit later. Just because I don't think I'm some amazing stock pick. I still want to invest in overall market tracking ETFs. And that's the reason why I set up my Vanguard account. So this Vanguard account was a lot smaller back in the day, but I have been growing it. And one of the reasons I grow it is for situations like this. My Vanguard account isn't as affected as my stake one is, just because of its diversification. Let's look at the first holding, VGS. VGS is international. So this ETF was trading at around 144 at one point, and it's dropped down. You can see low 130s. I think it might have just breached 130 after the today's news will kick in. But again, that's nowhere near as volatile as some of the individual stocks have been. So again, it gives me a bit of a global exposure. And also VLC, the reason I invested in that was a bit to diversify away from the US. So I have around nearly $12,000 in there, and that tracks the largest companies here in Australia. Whilst I'm on the topic of this, my Vanguard account, I am going to receive my biggest ever dividend, which is quite surprising. I didn't expect to get it this big. It's around $500, which is, I'm not a dividend investor. All my dividends just get reinvested back into my portfolio, but this was a very positive sign. My goal for me this year was to hit $2,000 in dividends, and I think after this dividend, and then the first one I got, which was around 300, I believe, I think I'm well on track to hitting that between both my stake and my Vanguard portfolio. If I can hit around, let's say 1,400, 1,500, whatever the case is in my Vanguard portfolio, I'll definitely break that $2,000 mark. And again, my goal with all my dividends is just to reinvest it back into my portfolio. Overall, the two portfolios are sitting at a combined value of around $102,000, which is quite decent, especially with this market downturn. But the only reason it's staying above $100,000 is because I've continued to dollar cost average in. So if we have a look at my Excel spreadsheet, what we can see here is kind of the weightings of the portfolio. This doesn't include my recent purchase, which will be into VOO. So we still got to wait for that. But you can see the goal is to keep it around 50% of my portfolio, and currently it's sitting at 46, so it is underweight. And then if we have a look at my Australian portfolio, my Vanguard portfolio, you can see it's 75-25, which looks really, really good for me to look at. So that's quite good. And then, yeah, you can see last month, things kind of took a bit of a dip with the stake portfolio. Well, it actually went up, but down from the previous highs in February. And my Vanguard account went up. That's just because of me putting in money. Whilst the markets are turning down, I'm trying to use this to build my portfolio positions like I did in 2022. Back in 2022, the markets had a really bad downturn, and I used that time to purchase into stocks that I believed in, that I had conviction in, and that really allowed me to grow my portfolio and reap the benefits of it in 2023 and 2024. So that's my goal again for this year. And I did see a thing saying that the S&P is up around 18% for 4 out of the last 5 years. So this market correction was really coming. Again, you have to be ready for these. That's the good thing about investing. It teaches you to kind of get your head down and look at the long-term view and not get lost in the day-to-day stuff. You don't want to be selling out of positions when they are really down, and you don't want to be buying high and selling low, as they commonly say. But yeah, that's my goal with this, is to just keep dollar cost averaging into quality companies. That means, because I'll be growing my positions and getting more shares, it means I'll obviously get a bigger dividends. So whilst I say I'm not a dividend investor, all my dividends I get reinvested do help the portfolio grow, especially when you see videos of people comparing if you reinvested your dividends compared to taking them out, how much quicker your portfolio grows over time with compound interest. So that's my goal. And yeah, you can see last year in 2024, I got around 293 USD, which is probably around 400 or so, 420 or whatever the case is, 10 AUD, and then 837 AUD for my Vanguard account. So this year, I'll be sitting on a really good track. I'll actually have basically hit my Vanguard total in the first 2 payments of the year. So that's really, really positive to be able to tick that off. That I'm really like that's the highest dividend I've probably ever got already in a year. Especially by the time we get to basically the end of the year, I'll definitely have broken the record for how much dividends I got last year. And I do track this here on these charts. You can see over time as it's kind of grown. I need to update this, so I can just go down here and go like this. You can see, and if we go with my Vanguard account as well, I update these at the end of the month. But yeah, you can see over time it's slowly trickled up. I used to be invested in more dividend stocks in my stake portfolio, but now that I'm really heavy into big tech and obviously they don't pay as much dividends, I think it's worth it long term, focusing on capital growth over dividend payments. But overall, that's how my stock portfolio is looking. So yeah, not very good in terms of gains. A lot of my gains have been completely wiped out. But that's the life of someone who is investing. This is the risks you take. It's not a risk-free asset. If I wanted that, I could obviously put it in my bank account, or you could invest in treasuries or whatever the case is. But I want to take this extra risk, especially while I'm young. And hopefully long-term this plays out for me. I can just continue to do this over 10, 20, 30 years. And by the time I'm a bit older, I can have a really strong retirement portfolio. Or there's something that I can just do a bit for fun, some trading, get some dividends, and just have it as a second bit of income. Feel free to share how your portfolios are looking in the comments, and I'll do another video tomorrow. Cheers.